Hey everyone, welcome to another episode on business period. And now we're going to be looking at the cessation rule. Previously, we had looked at the commencement rule of business period. So for now, we're going to be moving on to the cessation rule. So under business period, it's also possible for a business or a company. It is also possible that a company might want to cease operation, or a company that wants to cease operation is looking at or is looking forward to the most tax efficient date to cease operation, right? So what this means is that there are tax implications when a company goes into liquidation or when a company ceases operation. Now, the treatment of cessation of a company or the tax implication of cessation is taken care by the tax law under the Companies Income Tax Act. So, as I mentioned earlier on, the Finance Act that was introduced, the Finance Act 2019 that became effective in 2020, also made certain adjustments to the cessation rule. So, in this episode, we are going to be looking at the old rule of the cessation law and the new rule or the new law in accordance with the Finance Act 2019. You're going to see the reason why there was a need for that change between the old law and the new law. So let's get straight into business. Not to waste too much of our time, for the cessation rule, basically when a company ceases operation, there are certain rules that must be followed when you want to determine the tax implication of cessation. Or perhaps if you want to determine the best tax efficient days to cease operation, you need to go in line with the cessation rule. So before I introduce us the the Finance Act's new rule, I'm going to be briefly explaining the old law of cessation. So under the old law, right? Under the old law, what is important for us is that we need to determine the year the company has ceased operation. So if you want, you know that for a company that has not ceased operation, the company is going to be assessed under CETA on a preceding year basis, right? But as soon as the company ceases operation, then the law changes to the cessation rule. All right. Now, to determine that under the old law, 2 years are very, very important. So we have two major relevant years under the old law. We refer to them as the year of cessation and the year before year of cessation. All right. So the year of cessation can also be referred to as the ultimate year, the ultimate year, right? And year before cessation, is also referred to as the penultimate year. Penultimate year. So, of course, your penultimate year comes before your year of cessation. So I'm going to be bringing it upward. So it's important that we determine these two because they are relevant years, and the basis for assessing them is kind of different. Now, the ultimate year is the year a company has ceased operation, while the penultimate year is the year before the ultimate year. Every other years before the penultimate years are years that would have been assessed to tax on a preceding year basis. So if, for example, a company ceased operation in 2008, right? In this case, the ultimate year is going to be 2008, while the penultimate year is going to be a year before that, which is going to be 2007. Okay, 2007. So you have been able to clearly, so these two are going to form our year of assessment, right? So we have year of assessment here. So they are the two relevant years that we need to work with. Okay. If I write 2006, for example, 2006 will be assessed to tax on the preceding year basis. It's not really that important in this situation. All right. So now that we have determined that the two relevant years under cessation are the ultimate year and the penultimate year, like I said earlier on, the ultimate year is going to be after the penultimate year. Okay. So for us to determine the basis period of these years of assessment for the penultimate year, the basis period is going to be assessed using the two types of basis period we have. We are going to use the actual year basis, AYB, and we are also going to use the preceding year basis. Okay, so you're going to use the actual year basis to determine the basis period and the assessable profit of the penultimate year. You are also going to use the preceding year basis at the same time to determine the basis period and the accessible profit. However, choose you're going to choose whichever gives you the higher accessible profit. So that is the keyword there. So if the actual year basis gives you the higher accessible profit, you are going to go with the actual year basis. If the preceding year basis gives you the higher accessible profit, you're going to go with the preceding year basis in order to determine the accessible profit for the penultimate year. But for the ultimate year, the year of assessment and the basis period is determined strictly on actual year basis. Strictly on actual year basis. Okay. What that means is that I think we already mentioned, if you followed my first class, you already know how to determine actual year basis. Actual year basis are basis period that starts from January to December. But in a situation where a company ceased operation before December, the actual year basis is going to be from January till the date the company ceased operation. Say, for example, a company ceased operation in October 31st. The actual year basis is going to be 1st of January of that year to 31st of October of that same year. And then you determine the accessible profit based on that basis period. We have been able to now identify how to compute the accessible profit and the basis period for the cessation rule. Summary: you determine the penultimate year and the ultimate year. The penultimate year is the year before the year of cessation, while the ultimate year is the year of cessation itself. For the penultimate year, the basis period is determined on two bases: actual year basis and the preceding year basis. You're going to compute the accessible profit and choose whichever produces the higher accessible profit. For the ultimate year, the basis period is going to be computed on actual year basis. Okay, and that's it. So let's look at the question on that, and then we can solve it. So for example, okay, I also need to mention the fact that just like commencement, for any company that ceased operation before 2020, you are going to apply the old law. You're going to apply the old law to that company. But for any company that ceased operation from the year 2020 upward, the new Finance Act law is going to be applied to that company. For this question, Problem Limited, which has been trading for many years, ceased trading on 30th September 1997. The adjusted profits of the company for the 3 years preceding cessation showed the following. You have been given the year ended 31st December 95, year ended 31st December 96, and then period to 30th September 97 when the company ceased operation. What you are asked to do now is to compute the accessible income for all the relevant years of assessment. Okay, so as earlier mentioned, we are going to have the year of assessment, we're going to have the basis period, and we are going to have the accessible profit. Um, Accessible profit here. So I'm going to need to create this one in two places because I might need to select the higher of the PYB and the AYB for the penultimate year. Okay, so introducing my narrow sign. All right. So like I said earlier on, we need to determine the year of cessation. The year of cessation, or firstly, the company ceased operation in 1997, and clearly this is a period before Finance Act. So we are going to apply the old law to solve this question. So the year of cessation is 1997. That is going to form my penultimate year. I'm going to write it down somewhere. Then my second relevant year is going to be the penultimate year, which is going to be a year before the year of cessation. In this case, it's going to be 1996. So I have 1996. What I'm going to try to do now, starting from 1996, I need to determine the business period on both PYB and on both actual year basis. Okay, on both actual year basis and compare whichever produces the highest figure. All right. So on the preceding year basis, you know that preceding year basis considers the financial year end of the company. And if you look at the company's performance historically, it appears the company has been using 31st of December to prepare its financial statement. So on a preceding year basis, if this is 1996, remember what we said, that means that I'm surely going to end it with 31st December 95, 95, because it's on a preceding year basis. And if that is the case, I'm going to count 12 months backward, and that means I'm going to start from 1st of January 95. Okay, that will give me the basis period for 1996 on a preceding year basis. Then on an actual year basis, the basis period is going to be from January to December of the same year of assessment. So in that case, I would have O1, O1, 96 to 31st December 96. Okay, that is the basis period for the actual year basis. Okay, so I need to have um that of the ultimate year, which is going to be uh on actual year basis as well. So basis period on actual year basis is going to be from 1st of January 1997, 1997 so this time around, the company ceased operation in September. So it's going to be from January to 30th of September 97. 97. Okay. So I need to calculate my accessible profit. For the preceding year basis, you would notice that this basis period is exactly the same thing with this basis period. If this ended 31st December 95, means it must have started from 1st of January 95, which is this business period we have here. So the accessible profit is going to be 40,000. It's going to be 40,000. Now, for the actual year basis, you will realize that this basis period is exactly the same thing with this basis period year ended 31st December 96, a 1 year period. So the accessible profit is going to be 38,000. All right. And the law requires that there is a right of election by the tax authority to choose the higher between the PYB and the AYB. So I'm going to choose the preceding year basis as the the higher accessible profit. Okay. Now, for the penultimate year, this is from January 97 to September 1997. What this means is that if you look at this 30,000 or this period 2, when did they start? It must have started from the first date after which this one ended. So if this one ended 31st December 96, it means that this must have started 1st of January 1997, which is exactly this business period, and that is going to be 30,000. So you have a total of 70,000 profits to be assessed to tax for season operation for both 1996 and 1997. So which means that our actual year basis for 1996 in this case is not relevant. Now, if I take it out, so that's the solution actually. If I take it out, mean that it doesn't have any value here, you would realize that it appears we have omitted the profit for 1996. The profit for 1996 is not taxed. So, cessation usually results in what we refer to as gap in basis period gap, where you tax the profit of a particular period more than once, and there's a particular profit that was not even taxed at all, right? And that is going to be the actual profits of 1996. So because of this issue, there was a need to revamp the cessation rule of the basis period. Okay, so that is why we are going to be moving on to how the Finance Act treats the cessation rule now. All right. So for the Finance Act treatment of cessation is quite simple and straightforward. Okay. For the Finance Act now, there is no need for us to determine the penultimate year or the ultimate year anymore. What we just need to determine is to assess the company to tax on a preceding year basis until the last day of operation on a preceding year basis. Okay. However, the year of assessment for the last profit will depend on the final due date of payment of tax. Okay. We are going to explain that with this illustration now. Don't forget that the Finance Act rule applies to companies that have ceased operation in the year 2020. So let's look at a question. Apex Nigeria Limited, that was incorporated in 1990, ceased operation on March 31st, 2020, having been in business for over 25 years. The accounting year end of the company is December 31st annually. Determine the relevant years of assessment and the due date of payment of tax for A and B. Given the same scenario stated above, assume the company ceased operation on August 31st, 2020. Okay, so to solve this question, let's have year of assessment and let's have a basis period. Let's have basis period. And let's have, in this case now, you're going to introduce another column called due date of tax payment. Due date of tax payment. The company ceased operation in 2020 definitely means that we're going to be applying Finance Act. Okay. But the company ceased operation in March 31st, 2020. But before that, the company has been preparing its accounts using 31st of December. So let me give an example of what that means. So let's say the company has been in operation, the company was in operation as of December 20 um 2019. The company was in operation as at, let's even start from December 2018, December 2019. The company has been in operation. Um, okay. Then the company ceased operation in March 2020, not up to December 2020. So we have March 2020. That was when the company ceased operation. So if I have this like this, how am I going to have my basis period and due date of payment of tax? So for example, the basis period for this financial period is going to be before cessation is going to be obviously on a preceding year basis. So that means that I would have had 1st of January 2018 to 31st of December 2018. In this case, the company was still in operation at this time. Then I would have next on 1st of January 2019 to 31st December 2019. The company was also still in operation at this time. Then the next business period is going to be 1st of January 2020 to, I don't have it up to December, but I have it up to 31st March 2020. Okay, these are the business period. So before this last business period, the orders would have been determined, the year of assessment for orders would have been determined on a preceding year basis. So the year of assessment for this date is going to be 2019 year of assessment. The year of assessment for this is going to be 2020 year of assessment. Uh, then, to determine the year of assessment for the last basis period, we need to determine the due date of tax payments. The due date of tax payments, which is usually 6 months after the financial year end. So we need to determine after 6 months what will be the date. So if you count 6 months from 31st of March 2020, you are going to have the due date as 30th September 2020. Okay, 30th September 2020. That will be the due dates that we have there, like, as you can see. Okay, so according to the tax law or the Finance Act, the year of assessment will be the last year for the due date. So the due dates, this means that the tax payment of tax after cessation is still due in 2020, in September 2020. So because it is still due in 2020, the year of assessment would also be 2020. Okay, and that is how to determine the year of assessment for the last basis period. Okay, so this is the A part. Determine the relevant years of assessment and the due dates of payment of tax. The B part says, given the same scenario stated above, assume the company ceased operation on August 31st, 2020. So what that means is that it's no longer March, it is now August. So let's assume it is now August. Will we still have the same result? Let's find out. So let me draw that down here. It means that since this one ended 31st December 2019, ignoring this one, the next one is going to be 01 2020, then to end in 31st August 2020. 31st August 2020. Okay, so that's the new basis period based on when the company ceases operation. So the tax now is, what will be the due date 6 months after August? 6 months after August is going to be 28th February 28th February 2021. 28th February 2021. It means that the tax is going to be due in 2021. So since the tax is going to be due in 2021, the year of assessment in this case is going to be 2021 year of assessment. 2021 year of assessment. Okay. So that is how to treat the cessation rule under the new Finance Act. All right, let's apply that question to question two. The same question, but what was just slightly edited. All right. So, Problem Limited has been in business and ceased operation on 30th September 2024. Now, the adjusted profit of the company for the 3 years is given below. Required to compute the accessible income for all the relevant years. Okay, so We have the year of assessment, you have business period, you have accessible profits, then let me have due date of tax payment here, due date of tax payments. Okay. Um, the first, there's no need to determine penultimate and ultimate, right? Just continue on a preceding year basis. So the company uses December. So this is going to be, since the company uses December, this is going to be from 1st January 2022 to 31st December 2022. Okay. The next one is going to be from 1st January 2023 to 31st December 2023. The next one is going to be from 1st January, right, 2024 to the last date, 30th September 2024. Okay. Then the year of assessment for the first one is going to be 2023 year of assessment. Next is going to be 2024 year of assessment. The last one is going to be, we need to determine the due date. So if a company's cease operation in September 2024, the due date of payment of tax is going to be 6 months after. So that's going to be 31st of March. So it's going to be 31st March 2025, 31st March 2025. So since that due date is due, the tax is due in 2025, I'm going to have a year of assessment of 2025 year. And then what will now be the accessible profit? The accessible profit is going to be exactly this 40,000 because they have the same basis period. 40,000. The next one is going to be 38,000, and lastly is going to be 30,000. So in this case, you understand that no profit was taxed more than once, and there was no gap in the analysis. Right, so that's pretty much how to treat cessation rule for both the old law and the new law. So something I just want to quickly introduce us to, there's a little thing or issue around this new law, right, that we need to take cognizance of. So let's say, for example, a company ceased operation, a company ceased operation on let's say 30th April 2023. The financial year end of the company, the financial year end is say 31st March, say 31st March every year, 31st March every year. And the company ceased operation in 30th April 2023. Um, right? Or let's even have it as 31st May. So let's say 31st May 2023. Okay. 31st May 2023. All right. That sounds better. So in this case, how will I? Let's follow the same principle. You have year of assessment, you have business period, and yeah. So let's look at the due dates. The due date now. But there's no profit, so I'll just skip that part. Due date. So if a company sees operation on 31st May and the company has financial year end of 31st March, let me give us series of business period the company would have had before it ceased operation. For example, it would have 1st of April, because if your end is March, it means you're starting in March, in April. So 1st of April, let's say 2020 to 31st March 2021. In this case, you're fine, no issues, right? Then next, you have 1st of April 2021, 1st of April 2021 to 31st March 2022. The company had not ceased operation. You have 1st of April 2022 to 31st March 20 31st March 2023. So no issues. Again, we started from 1st of April 2020 to 31st March 2021. The company had not ceased operation. 1st of April 2021 to 31st March 2022. The company is still doing well. 1st of April 2022 to 31st March 2023. Operation has not been seized. Now, the next is going to be 1st of April 2023 to when the company ceases operation, because we don't have it up to 31st March 2024. So it's going to be 31st April 2023. So like 2 months, right? 2 months. All right. So if you're following the law of, you have all the basis period intact. If you're following the laws of basis period on a preceding year basis, the first one is going to be 2022 year of assessment, right? Apologies, 2022 year of assessment. The next is going to be 2023 year of assessment. The next is going to be 2024 year of assessment. Okay. But the last one says we need to determine the due date. So if a company is ceasing operation in 31st May, right, 6 months after is going to be that's going to be November. So that's going to be 30th November 2023, 6 months after. So I remember that the law says that if it is due in 2023, the business period is going to be 2023. So in this case, it's going to be wrong to have 2023 as a year of assessment when you already have 2024 up here. So when you come across scenarios like this, you just have to apply the same principle of preceding year basis and just put 2024 year of assessment under it. And that is how to solve that simple problem. Okay, that's it. So the last thing we should just quickly focus on is that there are some scenarios where we have some transactions called post cessation transactions. There are transactions that occur after a company had already ceased operation. What the law says about that is that we need to make adjustment for those transactions using while adjusting them using the last profit that the company earned. So let's say, for example, in October 2024, there was a bad debt that had been written off that was later recovered in October 2024 when the company had already ceased operation in September. So what we need to do is that if it's an income, we need to add it back to the last profit that was earned, which is if it's 10,000 income, add it to this 30,000, it becomes 40,000 before you then start calculation. If it's an expense, it has to be deducted, but ensure that the item is an item of either income or expense that you need to adjust. We call them post cessation transactions. Thank you everyone for listening to this particular episode. So we have finalized the cessation rule for both the old law and the new law. In our next episode, we are going to be looking at how do we determine business period and accessible profit under change in accounting dates. See you in my next class. Don't forget to subscribe to my YouTube channel and turn on the notification.